Hello, I'm Jen Kohls of Richardson Capital Management, and I'm joined with Dan Brown, our Director of Investment Management. We're here to provide the economic and investment update for August 2024. To review the financial markets in August, we had an exciting start to the month with a brief volatility scare. However, equities advanced by the end of the month, with an exception to small cap stocks. Meanwhile, fixed income posted solid gains for the second month in a row. Dan, would you like to provide some color about that brief volatility scare I referenced and share any other highlights to the financial markets?
Sure, Jen. So back to the start of the month, we saw a couple data points that were concerning to investors. One was the most recent employment report, which came in less than expected. And we also saw some reads on manufacturing specifically that had investors concerned. So we had a pretty big sell-off. There was like the one day in early August, about a 3% sell-off in the S&P 500. But kind of by mid-month, we saw some confirming data points that were very positive in nature, that the economy was still on track. Financial markets rebounded, as you mentioned. The other thing I'll highlight is we wrapped up second quarter earnings season. And again, pretty solid results all the way around for most sectors. We saw both revenues and earnings surpass expectations. So pretty positive signs from corporate America still.
The Fed met for their annual symposium in Jackson Hole, Wyoming, a couple weeks ago. At the symposium, Fed Chairman Jerome Powell made a powerful statement about the future of interest rates. He said, "The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability." What does this mean for investors, Dan?
It means the Fed can finally get around to start cutting interest rates. The Fed has been signaling this for a while, basically since last November, December. And we think the time has finally come that the Fed can start to reduce interest rates at their September meeting. This won't be a one-time event. So as we look out at financial markets and see what's being priced in for rate cuts, we see about 2% in rate cuts projecting out to the end of 2025. So that basically means that with Fed funds at 5.25 to 5.5% currently, we could maybe expect, Fed funds to be 3 to 3.25 by the end of 2025. We'll see if that all plays out. But again, the time has finally come. The Fed can reduce interest rates. And the Fed's been patient with a higher level of interest rates basically since last July because they've been waiting for inflation to come down. So the charts that we're showing here, the first one is going to look at inflation over time. So we do see that it's starting to come down. We had a little bit of a hiccup kind of to start the year with some sideways movement in inflation readings. But again, it's been coming down a little bit recently, and the Fed has gained confidence that it will continue to come down. And the second chart that we're looking at is the unemployment rate. And there's been a meaningful shift in the Fed's tone the past couple of months where they're starting to acknowledge that the employment rate has started to tick higher and causing some concern. So again, the Fed's dual mandate, keeping prices stable, but also keeping a high level of employment with interest rates as the primary tool. And again, we think the time has come that they can begin to reduce interest rates starting in September, probably with 1/4 point increments. So 0.25% in September. It wouldn't surprise us at some point in time if they did a 0.5 point or 0.5% if the labor markets weaken further.
What is our outlook for the financial markets and the economy, Dan?
Yeah, the outlook is still pretty positive. So we've been talking about this soft landing concept for a while. We still think that's the most likely outcome. So as we look at, the consumer, they continue to spend. That was one of those data points I referenced that we saw mid-month that was still positive. Again, unemployment rate, even though it's been going up a little bit, it's still fairly low. And corporate earnings continue to be positive. Even in the higher interest rate environment, they continue to navigate that just fine and continue to grow earnings. So overall, it's still pretty positive outlook. For the financial market specifically, we wouldn't be surprised if we kind of traded sideways for a while, just till investors got more comfortable with an outcome for the U.S. elections in November.
Thank you for sharing your insights, Dan. And thank you for watching. As always, we appreciate your continued trust and support.